press the bell icon on the YouTube app and never miss another update.
So what shall be the treatment of minimum alternate tax? See, we have the section 115 JB, and once the section 115 JB becomes applicable to a company will have to do two tax computations. The first tax computation is of course based on the normal tax provisions. So let us say for a company the normal tax rate is 30%. So just as the way normally you are calculating your taxable income, follow all the different provisions of the Income Tax Act. Whatever incomes are taxable, exempt, deductions available, disallowed, consider all the normal tax provisions and find out what is the normal taxable income and multiply that by 30%. Let us say that amount of tax, let's call this as the normal tax, or you may even call it as the regular tax. Let us say the regular tax amount is turning out to be 30,000 rupees. If section 115 JB is applicable to your company, you will also have to calculate book profit. You know, when it comes to the minimum alternate tax requirements, you are supposed to compute the book profits as defined in section 115 JB. How to determine that? That's a subject matter of section 115 JB. That is a part of your syllabus of direct taxes. So how to calculate the book profit, I am really not getting into it. You should study the provisions of section 115 JB and you should try to figure out that how that book profit is calculated. Returning back to our discussion, we will now do a second calculation of that tax. This time we will consider the book profits. So I will calculate the book profits. How to calculate the book profits? Book profits as per section 115 JB. 115 JB gives a detailed procedure that how the book profits will be calculated. Book profit does not mean the profit as per your accounting books. Don't be under that impression. 115 JB has given an entire list that what will be included in book profit and what will not be included. So find out what is the book profit as per section 115 JB. Then we have a special rate over here. Right now it is 18.5%. Whatever is the book profit, multiply that by 18.5%. That is what is popularly known as minimum alternate tax. Let's assume for a moment that the minimum alternate tax turns out to be 1 lakh. So section 115 JB says that when 115 JB is applicable, find out what is the tax as per the book profit concept, and also find out what is the tax as per the normal tax provisions, and whichever is higher is payable. So as you can observe in our illustration, minimum alternate tax is turning out to be higher. So 1 lakh rupees of minimum alternate tax is payable. How will now I present this in my financial statements? In Ind AS 12, you read the entire accounting standard. Nowhere they have mentioned anything about minimum alternate tax. But since 1 lakh is the tax payable, I can argue this is nothing but current tax. Tell me, what is current tax? We had discussed this as one of the concepts earlier. What is current tax? Current tax is the tax payable as per the tax laws of the applicable assessment year. Now, since in the current year you are going to pay 1 lakh rupees of tax, I can always treat 1 lakh as the current tax. So, although Ind AS 12 does not mention MAT anywhere, still I can consider this as nothing but the current tax. So, when you are preparing your financial statements, present the minimum alternate tax payable by you as a part of the current tax. Second issue. We also have something known as section 115 JAA. Now what happens in section 115 JAA is whatever additional tax that you are paying, a credit of that will be available. Now, as you can observe in our illustration, the normal tax is 30,000 while the minimum alternate tax is 1 lakh. So I just want to know what is the additional tax that I am paying, right? The additional tax, by observation, you can say the additional tax is 70,000 rupees. So I am paying 70,000 rupees extra. This is known as MAT credit, and this MAT credit can be carried forward. and it can be set off for the payment of the future taxes. For example, let us say in the next year 115 JB is no longer applicable. The moment 115 JB is no longer applicable, I will now start paying tax as per the normal and the regular tax provisions. Once you start paying tax as per the normal tax provisions, whatever extra tax you have paid, you will get credit for the same. For example, let us say in the next year 115 JB is no longer applicable to me. So as per the normal tax provisions, let us say now I am supposed to pay a tax of 40,000. But I will argue that I have already paid 70,000 tax extra in the previous assessment year. So I will not pay any tax in the next assessment year. In the next assessment year I am supposed to pay 40,000, but I have paid an additional tax of 70,000. For this extra tax, credit is available. So in the next year what will happen is this 70,000 will be set off against this 40 and I don't have to pay any tax in the next assessment year. Not only that, there is an unutilized MET credit over here, right? So I will have an unutilized MET credit. What is the unutilized MET credit in our illustration? 40 will be adjusted with 70, so that turns out to be 30,000. This MET credit of 30,000 as per section 115 JAA will be carried forward to the next year. In next year also you will apply the normal tax provisions, find out what is the amount of tax, and then you can again carry out a set off. As per the section 115 JAA, this MET credit can be carried forward for 15 assessment years. Yes, you heard me right. For 15 assessment years, I can carry it forward. So the next question that arises is, what should be the treatment of the MET tax credit? How am I supposed to now present that in my financial statements? The minimum alternate tax that you are paying is a part of the current tax. That I have understood. In the current year, I will pay 1 lakh rupees. That is a part of current tax. But I also know that 70,000 rupees of additional tax that I am paying, I can carry it forward for the next 15 assessment years. So how should I present this now in my financial statements? How should I show it when I am preparing my balance sheet? What should be the treatment? Again, as I said earlier also, Ind AS 12 does not mention anything about minimum alternate tax, but it does mention about tax credit. Right? They use a general term. They are saying that what should be the treatment of tax credit? Light is thrown on this matter under Ind AS 12. And you know what shall be the treatment? The treatment of any tax credit shall be on the lines of deferred tax asset. What is MET credit available? You are saying I will carry forward 70,000. Tell me, what will happen if I carry forward this 70,000? Next year I am supposed to pay a tax of 40,000 as per the normal tax provisions. Now I will not pay that 40,000 because I have already paid 70,000 extra earlier. Don't you feel this is in the nature of a deferred tax asset? Because what's the concept of deferred tax asset? Concept of deferred tax asset is that you will be able to save tax in future. So in future, when 115 JB is no longer applicable, once I move into the normal tax provisions, as per the normal tax provisions, I am now supposed to pay tax of 40,000, but now I will utilize the credit that I have accumulated, and because of that credit, I don't have to pay 40,000. So I am saving tax. So the MET credit which is available should be treated like a deferred tax asset. The moment you say that it is nothing but a DTA, the 3-step criteria of Ind AS 12 will become applicable. I'm not going into the details of the three-step guide. You know it very well. Very quickly. 1, sufficient taxable temporary difference is available. 2, a future taxable income is probable. And 3, yes, tax planning opportunities are available by which we can increase our taxable income. So when it comes to the MET credit available, you can show the MAT credit available in our books as per Ind AS 12 as a part of deferred tax asset, provided the three criteria which are required for its recognition are getting fulfilled. We have a question relating to it. We can do that question. Question 16. Please go through it. Let's read question 16. QA Limited does not have taxable income as per the applicable tax laws but pays minimum alternate tax MAT based on its book profits. The tax paid under MAT can be carried forward for the next 10 years. That's an old provision, 10 years. Now it is 15 years. And as per the company's projections submitted to its bankers, it is in a position to get credit for the same by the end of the 8th year. The company is recognizing the MAT credit as a current asset under the Indian GAAP. The amount of MAT credit as on 31st March 2016 is 8.5 crores and as on 31st March 2017 is rupees 9.75 crores. How shall the MAT credit be presented in balance sheet as per Ind AS 12? When you are following the IGAP means the regular accounting standards, and when you follow regular accounting standards, you have to follow accounting standard 22. Under AS 22, the MAT credit available is not considered as a DTA. It is considered as a current asset. So that's the reason they are saying that we are presenting it as a current asset. But when you are following the Ind AS 12 is clear. Any tax credit that is available is nothing but a deferred tax asset. So as far as Ind AS 12 is considered, we will be presenting the MAT credit available as a deferred tax asset. So when you prepare your balance sheet on 31st March 2017, show 9.75 crores as deferred tax asset when you prepare your balance sheet. And yes, if I compare 9.75 and 8.5 crores, which is the opening balance, I can argue that 1.25 crores of additional credit is going to be available in the current year. Let's put our answer very formally in our books. Please write in your notebooks the solution, the answer for question 16. MAT credit on 31st March 17. MAT credit on 31st March 17 of rupees 9.75 crores. Of rupees 9.75 crores shall be presented as deferred tax asset. Shall be presented as deferred tax asset. Full stop. DTA for the year is rupees. DTA for the year is rupees 1.25 crores. 1.25 crores. You may write in brackets 9.75 minus 8.5. DTA for the year is rupees 1.25 crores in brackets 9.75, which is the closing balance, minus 8.5, which is the opening balance.
Press the bell icon on the YouTube app and never miss another update.